Hey doing guys, welcome back. It's LSP. It is currently the week starting the 6th of October 2025. So we're a couple of minutes from the market open and let's see what we get today. So let me just talk a little bit about what this is. So this is the overnight range, gapped up just a little, obviously been grinding higher, had a really nice drop here, reversal, and then we've just been grinding up ever since. Creates a new all-time high. We've just eased off that all-time high a little bit, and now we're getting a little bit of an explosive pop back towards that all-time high. Again, a couple of minutes before market open. So let's see how we fare. Again, really no rush. Not looking to change the world in 5 minutes, Just want to be patient. Let the market settle. Let the market tell us what it wants to do, monitor price, have an idea, and then execute if and when something presents itself. So 1 more minute to go. There's a lot of selling coming into the market up here. So this candle, there's quite a lot of selling on the way up. It's all been absorbed. So just judging by the way price is behaving pre-market, we could get a swing both sides, meaning we could rip, take out new all-time high, and then sort of come back, or we could just drop from here, which would give us an opportunity to potentially revisit this all-time high at some point today. But again, I just want to see what's happening in the market first. All of this information is great to have, but it doesn't necessarily mean profitability if you don't know what you're looking for and how to execute as a disciplined trader. So market's open. Got some buyers stepping in, got some sellers stepping in. Bit of both, really. And I like to use the 5 minute on open because it's not as noisy as the 1 minute. Even small biases, little things. For example, if you drop down to a 1 minute chart, you may see, a drop and then a reversal on a 1 minute time frame, and you think, oh, it's probably going to go up. But the bigger picture, i.e. the 5 minute in this case, it's not really showing that. All it's showing is the little bit of movement that we're getting within this candle may very well be what looks like a reversal on the 1 minute or the 2 minute, but in actual fact isn't anything. It's just the normal course of trading, normal course of buyers and sellers, normal course of the market. So again, really no rush. It is looking like we do want to take out this new all-time high, or at least revisit the all-time high. But again, anything can happen in 5 minutes. The first 5 minutes of open is a lot of noise. And like I said, it's a challenge for newer traders who are inexperienced to not want to get into this, because what they're looking at is, oh, it's a tail, it's forming a wick, it's rejection, it's going to go up. But it's a 5 minute chart. It doesn't really tell you anything, And again, let's say it explodes to the upside and goes through all-time high, runs a little bit to say 25,100, for example, and then reverses and starts to come all the way back down to what is currently the point of control, the blue line, right? There's a trade there. There would be a trade here. There could potentially be a trade here. You get multiple opportunities throughout the day to take a position on, right? So you don't have to do everything in the first 5 minutes or 10 minutes or half an hour. You only need to react when the market presents what you are looking for based on your methodology and based on your trading. So There's no rush. There's really no rush. And while this is happening, I'm building a narrative in my mind. I'm watching volume. It's a little bit, it's on the other screen so you can't see this, but I've got footprint chart. So I'm watching volume. I'm building a narrative, and I ask myself the question, do I want to short here? Yes or no? And then I'll go through the reasons for both. Do I want to go long here? Yes or no? And then I'll go through the reasons for both. And then I give myself levels where I expect or want to see price trade back to or to for me to react, for me to open a trade. So just as a very quick example, let's say this is completely reversed. So in another minute, the next 5-minute chart, the next 5-minute candle starts and it rips to the upside and closes here, right? And then the next candle drops a little bit, reverses, and then takes out this candle's high. Yeah, I'm comfortable taking along like that because I've seen enough. And obviously, if what I'm looking at on the other screens confirms what I've just said as that narrative, as that context that I would be looking for, great, But at the moment, we're in the middle of nothing. The market's been open literally for 4 minutes, and it's very easy, like I said, to create this weird narrative because you're focused on the money, or you're focused on the need to want to be in the market, or your impulses or your emotions are getting the best of you. You don't need to do any of that. You just need to chill and just let the market do its thing. There's been quite a lot of sellers that have come in the last sort of minute or so. Still continuing. There was some buyers that came in, but nothing compared to sellers. If you're looking at it on a ratio from 1 to 100, we're about 80-90% selling at the minute. So it's certainly not something that I want to be getting into at the moment because I haven't seen enough for me to open a trade. And you've also got to be mindful as well. I'll run through some scenarios that I know beginning traders do. So for example, they'll look at this, they might read somewhere, that the first candle does A. If the second candle does B, then you take a position and you put your stop below, the candle that you're trading on. The problem is when you're doing that with the futures market, and the NASDAQ, which moves very fast, you could comfortably, the NASDAQ could comfortably take you out, take the people below you out, stop the people below them out, take these guys out, reverse, and rip all the way to create a new all-time high without even batting an eyelid, right? So you have to factor all of this in. Predominantly, or should I say the main reason people want to use really tight stops is because they want to increase the size, right? So they can make more money. But in doing so, you are also increasing the risk exponentially and the possibility exponentially that you're going to be stopped out before the move happens, right? So it's better to drop your size, give yourself a wider stop, and take it from there. And speaking of stops, what I might do is, let's go for a 50, because I had in mind to do this actually. And we'll put a limit in for, say, 50 as well. Yeah, I had in mind to do this, to set it up, but I completely forgot this weekend. So when I open a position, I've got my stops and my limits already there, and then I can just move them on the chart. So I'm messing around with this system that I'm trying to create. I've got my mind on a lot of different things, and this weekend I had in mind to do that, and I completely forgot. So it's good that I just reminded myself. So what what are we seeing, right? We saw a drop on the open. Now we're seeing a little bit of buying stepping in, right? Getting a little bit of mild bullishness, whatever you want to call it. I don't really like labels, but let's say just mild buyers, mild bullishness, whatever. But again, now the narrative in my head is changing, right? It's like I've got a clear indication up here where it's, let's say, I mean, really, I'm going to use this, right? So we've got this line. I want to see price back above this line. But also, there is the possibility of this now, where we have this area where I can start to create ranges. We know if price explodes, holds up here, the likelihood of us getting that last run to all-time high is about 30 points, right? That's a great range to trade in, especially with the type of trading that I do. If it breaks this and shows the willingness to want to go lower and everything confirms, where is the possibility? Where's the range, right? We could say, well, potentially on the open of this candle, it's around, let's say 40, 49. Is it worth it? No. 20 points? No. But if we expect that this low is going to be taken, then that gives us that little, a little bit of extra range to go into where we could potentially be trading down to, right? So it's about making sure that all of the elements are set up the way that you need them to be set up before you open a trade, because otherwise, many beginning traders end up in trades where there's no follow through on trades, there's no momentum, there's no volatility, and the range that they're trading into is quite poor, which doesn't really give you a trade the best possible chance of it moving, enough. There's not enough air for the plane to, to fly to, or fly through, should I say. So now I want to see what that candle looks like. See this candle here, this big messy candle. Let's just drop down to the 1 minute. Just get a feel for what that looks like. Yeah, and you can see how messy this is. This was the level I was referencing here. Where are we? So 39 would have been here, the top of this candle, or the open of this candle, which we almost traded to, as you can see. So the range, not that great. And then these are the lows down here, and this low here, and this low here, that I was saying if price could potentially come down to. We're talking about 920 if it does do that. But what I'd really like to see, to be quite blunt and honest, is I want to see this taken. I want to see us get back above the point of control. I want to see us hovering around here. I want to see us get back above this level, and then I want to take a trade into, all-time high. That's the preference for me. But if I see an opportunity to potentially take a quick scalp below this low and into these lows, then I'll take that as well. But again, I'm not confident at the moment. I'm not seeing enough. Time is extremely important. Time of candle, very, very important. We've got 3 minutes, 20 seconds or so before this candle finishes. So don't necessarily look at the wick and say, okay, well, I can see rejection. I can see rejection. This could easily be reversed in 3 minutes, 2 minutes, 1 minute. You need to get as close to that candle close as possible. And if you are confident with what you're seeing, drop down to a lower time frame. Go to the 2 minute, go to the 3 minute. Yeah, a couple of time frames lower, and it should give you a better indication as to whether this wick is likely to hold. So we go down to the 2 minute. We can see what that is made up of, right? We can see that we went up a little bit. We can see that we reversed. We can see we reversed again. Now we can see that we're trying to challenge these lows. And now we want to see a bit of weakness down here. We want to see buyers stepping in and getting absorbed. and that'll give us an opportunity to potentially take a short. But again, I'll be honest with you, I would rather avoid taking a short here, because I can see a lot of sellers stepping in, right? The last ratio is about 70% sellers at the minute, you know, and it's still trying to hold this level, hold. So again, do you know how many times over the years I've taken a short right here in situations like this, and then price has just gone, hovered around a little bit for a couple of minutes, and then boom, and then boom, and then boom, and boom, and boom, and just keeps going. And it's like, really? You know, so again, I don't feel the push, right? It may feel like, sorry, it may look like it on the chart, but I'm not feeling that explosive move to the downside. I'm not seeing price really want to skip, you know, to levels fast enough for me to want to take a quick scalp. Even though it's looking like it's moving, even though it's looking good, it's just not, it's not lining up the way that I want to see that. And for those that use cumulative volume delta, the delta is actually decreasing. So we just had a huge negative delta, and that's slowly now evening off, you know, and it's steadied off, a little bit of buying, stepping in, increasing a little bit. But can you see that there's just no follow through? There's no real follow through, no real push. Forget price, forget looking at this and saying, if I took it here at 42, I could have taken a quick 20, but forget that. You've got to look at price. You've got to really look at price and pay attention to what price is doing, because this is not the way that I would like a short to be set up. Yeah. When I open a trade, I want to be confident that it's just going to go in my favor, because a whole bunch of other things have happened first to warrant that move, you know? And just the fact that we're just stabilizing down here a little bit, just the fact that we're absorbing liquidity down here, just the fact that buyers are now stepping in again, you know, now we need to start to think about, what do I need to see price get back above before I would consider potentially taking a long? Let me just do this. It's a bit, need to zoom in a bit. Where I would want to potentially take a long. I want to see this at least traded above, and then I would want to see this traded above. So at least a couple of levels here. Let's go back up to the 5 minute just so we can see what we're doing. Yeah, I want to see this completely reversed. Now, when you're looking at this particular structure, you can say, okay, now we can start to build a little bit more of a narrative, okay? You know, price ran up, created an all-time high, came down, tried to retest, got a lower low, fine. Nice drop on the open. And then we see this drop and drop and drop, a little bit of stabilizing, but this last portion here took out these lows, you know, so it could very well be that last little bit that it needed to scoop up before it starts to grind its way back up, right? And if you look at the range that we're playing with, not that great. Again, buyers stepping in. Last 6 footprints have been buyers, solid buyers as well. You know, the delta's quite high. But again, could easily be reversed, you know, with one negative footprint. So this is experience, guys. You know, when you've been in the market long enough to know, probably not the best short to take. You know, it's not an easy thing. You know, it takes time. You need experiential knowledge in the markets. You need to have spent a lot of time in the markets watching price, you know, on 1 or 2 assets at the absolute most, and become really familiar with what it is that you're looking at, you know, the behaviors of these asset classes, and then you can take much better high quality trades and avoid situations like what we're seeing now, where I could have taken a short. Sure, I could have made a little bit of money. Is it the real play? Not. I don't think so. I don't think it's the real play. Otherwise, I would have I would have taken, position. Not to say that I would have been right, of course, but, it's a constant assessment. You're always assessing. And these are just markers, guys. These aren't special levels. They're just markers, just to give an indication. I wouldn't have these on my charts. I'm putting this on the chart for the video, but this is where my eyes are going. This is what I want to see. So nice rejection, nice reversal, right, from this sweep. Okay, for now. And even from here to the point of control, you're talking a good 40 pips, 40 points. Yeah, so decent. And now the point of control has just come down here. Fantastic. Absolutely fantastic. Want to see this high taken. So now I'm going to move this to here just to show you visually what I'm looking at. Been recording for about 20 minutes. Got about 40 seconds left of this 1 minute candle. The other thing as well is I try not to have too many charts open because it forces you to go down and up on the same chart. Yeah, it might feel like a small thing, but if you have, say, if I had the 5 minute chart up somewhere else, I could visually look at the two charts, fine. But then if I had a 5 minute, a 15 minute, maybe an hourly chart, I've got enough screens for it, obviously. Sometimes what that does is it gives you too much information. Whereas, this high was just taken, but the candle hasn't closed above that high, right? It's just easing off a little bit, And look, now that we're here, where most of the volume is taking place, you can see that it's starting to get a little bit messy, but at any moment, anything can happen and we could see an explosive move one way or the other. I'm trying really hard to be patient in the sense of the video, because I want an opportunity to take, a really good quality setup so you can see the thinking and the process behind, a realistic trade that makes sense. But I may not get this because I don't want the video to go, into half an hour, an hour. I mean, this is it's a full trading session, but I do want to try and capture, these quality trades that I've explained and I've gone through the process of what that looks like. I do feel that I'm probably going to take a long today. That's probably going to be my first trade. And I'm looking for, at least a move back up into this area before I would consider doing that. I want to see enough, of this recent sweep reversed for me to comfortably take, a position long. But at the moment, it's not giving me what I'm looking for. So again, absolutely no rush at all. And all we want to see to pique our interest again is just one of these candles reversed really strongly. The narrative can change that fast. We're currently looking at a 2 minute chart. Let's say this 2 minute this 2 minute candle closes as is, and then the next 2 minute candle explodes here, closes. Then the next 2 minute candle, that narrative has just changed in 2.5 minutes and given us an opportunity to once again focus. Yep, it looks like something's setting up, and then you start to add all of the other elements as well. But all the while making sure that you don't add too much emphasis on patterns. Pattern recognition is great up to a certain point, but then it gets you into trouble because you add way too much weight to the pattern and what that signifies and what it represents according to your understanding and bias. And in almost all cases, you're going to be wrong, you know, especially when you start to think about the ranges that you're playing with, what's already happened in the market, how the market opened, what sort of volume you've got, what time of the year you're in. All of these variables have an impact on the way patterns are created. And as such, you need to be careful how those patterns are, you know, received and how much weight you add to those patterns. So for now, we'll probably call it there. It's currently 2:53, so almost 9:55 a.m. Eastern time. It's not looking like we're going to get anything anytime soon. I don't really want to be hanging around for another 7 minutes or so on a video for 10 o'clock reversal. So what I might do is I'll call it here, and if I see something that I'm potentially looking at trading or opening a trade, I will create another video. So we'll leave it there. I hope you have gained some value in this video. I hope you enjoy these videos. Don't forget to give me a follow, and I look forward to speaking to you guys very soon. Ciao for now.